How billionaires actually avoid paying taxes. They owed $0. Jeff Bezos, Elon Musk, Michael Bloomberg, all of them, legally, paid no federal income tax in certain years. Not a penny, not even a dollar. Meanwhile, the average American worker paid thousands. But here's the kicker. It's not tax evasion. It's not even a loophole. It's the system. A system that these billionaires didn't just benefit from, they helped build it. So how exactly does a billionaire worth $200 billion legally avoid taxes? How do you make hundreds of millions per year and still claim no income? The answer lies in something almost no one's taught in school. A hidden system of phantom income, borrowed billions, and something even more sinister we'll get to later in the video. And to understand how we got here, we have to start with the big lie about income itself. The income illusion. Most people think of income as a paycheck. You work, you get paid, you pay taxes. But for billionaires, money works differently. They don't earn money the way most people do. They own it. Bezos doesn't take a $10 billion salary. He takes a $81,840 salary. And even that, he probably overpays in taxes on. Because his real wealth? It's in Amazon stock, just like Musk's is in Tesla. And Buffett's is in Berkshire Hathaway. And here's the catch. Stock gains aren't taxed until you sell. So, a billionaire can sit on tens of billions of dollars in unrealized gains, live like royalty, and technically claim to be low income. And that's not even the clever part, because if they never sell, they never pay a dime in capital gains. But then, how do they afford the yachts, the mansions, and the private jets? That's where it gets sneaky. Borrow against your billions. Imagine this. You're worth $50 billion in stock. You go to the bank and say, "Hey, I'll give you some of this stock as collateral. Lend me $500 million." The bank says, "Sure." And boom, you now have $500 million in cash. You didn't sell anything. You didn't trigger any taxes. And under U.S. law, loans aren't income. They're not taxable. This strategy is so common among the ultra-rich, it has a name. Buy, borrow, die. You buy appreciating assets like stocks or real estate. You borrow against them to fund your lifestyle, tax-free. Then, when you die, your heirs inherit everything at a new tax basis, wiping away all the gains. This is the cheat code, and almost no one talks about it. But this whole thing depends on one silent accomplice. The friendly Fed, what makes this whole game work. Low interest rates. For over a decade, borrowing money was practically free. A billionaire could get a $200 million loan at 1% interest, backed by their stocks. That's cheaper than a mortgage, cheaper than inflation. And unlike selling stock, which signals to the market you might be cashing out, borrowing lets you keep your holdings and get cash. No sell-off, no taxes, no questions. Plus, interest payments on those loans? Tax deductible. So billionaires borrow tax-free cash. Then deduct the interest from their tiny taxable income. Meaning, some years, they actually show a loss on paper. And you might think, well, that can't go on forever. Except, it can, because of what happens at the end. The step-up trick. Let's say a billionaire owns a $100 billion in stock. Never sells, just borrows to live. Then he dies. Normally, you'd expect the IRS to come knocking with a tax bill for all those gains. But nope. Thanks to a tax rule called the Poitrud step-up in basis, all that appreciation vanishes. If Bezos bought Amazon shares at $1 and they're now worth $3,000, his heirs inherit those shares as if they paid $3,000 for them. So when they sell, no capital gains taxes. It's like the original gains never happened. This loophole has cost the US government trillions in potential revenue. And the worst part? It was never really a loophole. It's just the rule. But when this method started getting attention, billionaires panicked. So they found a new disguise. The philanthropy smokescreen. Billionaires love being called philanthropists. They create private foundations, pledge to give away half their wealth, and get awards for generosity. But here's what actually happens. They donate billions in stocks to a foundation they control. When you donate appreciated stock, you don't pay capital gains tax, and you get a massive tax deduction based on its full market value. Then the foundation invests that money in more stocks, or in real estate, or in venture capital. And guess who gets to control how it's spent? They do. They hire family members, pay themselves salaries, hold galas, rent jets, fund think tanks that, surprise, just so happen to support policies they agree with. Philanthropy has become a shell company, and while it may do some good, it also functions as a financial fortress. But even all of that isn't the end game. There's one final tactic, the billionaire's final move, designed to shield their empire forever. Dynasty trusts and the eternal empire. When most people die, their assets are taxed. But billionaires use something called a dynasty trust, a legal vault that lets their wealth pass to children, grandchildren, and beyond. Tax-free. Here's how it works. You put your stock or company shares into a trust. You structure it so it skips estate taxes. You appoint a trustee, often your lawyer or family member, and the trust pays out money to your descendants for generations. No estate tax, no income tax, no public record. It's not just about money anymore. It's about control. Control that stretches far beyond the grave. Some trusts are designed to last for 300 years or more. In effect, billionaires have built empires that not even death can tax. But this system wasn't just discovered, it was designed. Which brings us to the question most people don't want to ask. Conclusion: who wrote the rules? If all of this feels unfair, it's because it is. But the truth is, billionaires didn't break the rules. They wrote them. Campaign donations, lobbying, super PACs. Over decades, the ultra-rich have shaped the tax code to reward ownership, not labor. To tax income, but not wealth. And as inequality grows, so does their power to protect the system. While you work a 9-to-5 and pay taxes on every paycheck, they borrow billions, pay nothing, and pass on empires. They'll call it innovation. They'll say they're job creators. They'll hide behind philanthropy and economic jargon. But when you strip it all down, what you find is this: the greatest tax avoidance strategy in history isn't offshore. It isn't secret. It's right here, in plain sight.